Good morning, everybody, and welcome to this week's weekly analysis session for Monday, the 22nd of June 2015. Hope everybody's had a good weekend. Let's get stuck into today's session. Firstly, a quick reminder, we've got the Elite Traders Club and the Elite Investors Club Academy this year coming up in the end of August, 28th of August through to the 2nd of September. We've got a great lineup, some really good trading topics, forex, options to boost your portfolios along, as well as a little bit of a recap on some of the materials that we've covered in the past for the newer folk. Also having a look at fundamentals and technicals. Do they or can you mix the two? Jeff and I will be running a session on that. So yeah, not just the learning aspect of it, but don't forget some networking opportunities as well to get to meet some of your fellow traders. All your meals and accommodation are included. So get along if you've got nothing else in your diary at that particular time, or you'd like to have a bit of a holiday that's potentially tax deductible, speak to your accountant, then by all means, you're more than welcome. Just some pictures of the resort there. You can have a game of golf. We'll be going on a cruise, an evening cruise, having some meals outside, having a lot of fun along the way. All right, disclaimer, the content of this presentation nor any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So before making an investing decision based upon the general advice presented in any of the following ETC presentations, please consider whether it's appropriate in light of your financial circumstances. The agenda, we'll go through and have a look at what the portfolio is doing at this point in time, both here and in the US. We'll also have a look at some specific setups and then some Q&A. All right, in the Australian market, we still remain in a high-risk market, meaning that we need to apply a 40% market risk multiplier to our maximum allowable drawdown. If you don't know what that means, give the guys in the Elite Traders Club, the coaches, that is, a call, and we will explain it to you. In the US, the S&P 1500, market risk there is low. The previous week, we just had ticked down into moderate risk. A little bit of strength in the market there towards the end of last week has now dragged that index back into low risk, meaning that you can now apply a 100% market risk multiplier to your maximum allowable drawdown. Assuming that you are mixing your portfolios 50-50 between Australia and the US, given that at this point the ASX is in a high market risk, you use a 40% market risk multiplier. You apply that to 50% of your trading capital. So instead of a full 15%, that would mean 7.5%. So applying that market risk multiplier of 40% to the 7.5%, that allows you 3% of your entire portfolio is allowed to be exposed as risk in the Australian market. In the US market, half of your 15%, that is 7.5%. How much of that are you allowed to expose? Well, 100%, it tells us, under a low market risk conditions. So hence, you're allowed to have that full 7.5% exposed as risk in the market. For those of you that are still choosing to scale out in the Australian market, you are looking for targets of 1-to-1. In the US, low risk over there, you are looking for targets of 3-to-1. Right, let's go and have a little bit of a look at the markets. Just a reminder, Friday afternoons we do a macroeconomic macroeconomics analysis session is what we do on Friday. Myself and Jeff Saffer, Jeff providing the intellect and the depth of information based on the macroeconomics. So very, very important to find out what sort of news is coming out. In particular, this week we've got HSBC flash PMI in China, which is likely to impact our local market. Last week we did do an education session on the Trade Journal, the first of about 3 sessions, so please make sure you're up to speed with the Trade Journal and how all of that works. And the watch list will be up after the conclusion of this presentation. If you do need any help with your trading along the way, please don't forget to give one of the guys request a coaching call. All right, there we are in the US S&P 1500 at the moment. You'll see that we have The stochastic has last week had gone down below the 80, putting us into moderate risk. It's now turned around and just moved back up above the 80 level and putting us into low risk market. So there's our 100% print on the chart. In the Aussie market, let's go and have a look there. The XJO, you'll see that we are still on the downward side, below 60, between 40 and 60. We are in a high risk market at this point in time. Our market is certainly, it's trying to move back up, but finding the going still a little bit tough. Hopefully this week we get some positive news out of China and we can start to make our way back up and boost those portfolios along the way. So that's the indices. Let's go and start with the Australian market at the moment. There's only one setup this week in terms of price action that really met all our criteria. Remember, we're trying to keep our trade setups with stops representing around about the 10% in price figures. So, you know, plus or minus a couple of percent is certainly okay, but we want to try and avoid stocks where, you know, the distance is, you know, getting out to 14, 15, 16, those sorts of things. It just means that the stock's got to move a little bit further to get to its 1-to-1. It does mean the stock's certainly a little bit more volatile as well. So this was the first one on the list, Blackmores BKL. If we scroll out, you'll see that we're in blue sky, and as such, we've just had a short-term trend confirmed, this last candle with a higher high and higher low. So therefore, now that we're in short-term uptrend, we've got the confirmation of a newly formed trough. This trough is well clear of the second from last peak. There's the last peak, second from last peak. So our protective stop needs to go at least 2 ATRs below our entry level and at least 0.5% below our last medium-term trough. So the order becomes on stop at 78.92 with a limit to 79.70, protective stop at 68.75. That's BKL. There were a couple of other stocks in the Australian market that had good price action, but the distance between entry and stops was a little bit wide. We'll just have a quick look at those. ASZ, certainly one we've just put in a nice new trough, well clear of the second from last peak. Only drama with this one is we're starting to really get out to a very wide stop on this one, around about the 15-16% level. So again, just a little bit volatile, and for that reason, I won't be putting it in the watch list, but it's one, you know, again, just to exhibit nice strong price action. The other one, McMillan Shakespeare, looking really good. We've just put in a short-term uptrend, so therefore confirming the formation of the new trough. Trough at or above the second from last peak certainly is. The only dilemma with this one here in the Australian market is that we have a long-term peak sitting right at that level there. And as you can see, we're just below that coming up into it. So this is the highest point between our medium-term uptrend and what is eventually a medium-term downtrend. All right, through here, we're actually in medium-term uptrend. We've just got a whole lot of stagnation going on through here. So remember, our definition of our medium-term downtrend is we must have lower peaks first, then lower troughs, which we finally do have over here. And so definition, the highest point between our medium-term uptrend and when we have the confirmation of a medium-term downtrend is a long-term peak, and that's that level there. So that one there, meeting the price action, but we're just too close to that long-term peak. The other one was TAN, exhibiting nice strong price action through here. Very volatile stock, sometimes not even trading, very little sideways, very little movement. Liquidity is probably a problem with this one. In terms of price action, last trough at or above second from last peak certainly is. Zooming out, we're at all-time highs. The only drama with this particular one is we've got to have a very wide stop. So for that reason, we won't be putting that one into the watch list. Let's go and have a look at in the US. The first one on our list, ABC. Let's zoom out and see where we are. All-time highs at this point. So there we go. Last trough, just forming that last candle, doing the nice job of converting a short-term downtrend into a short-term uptrend, and therefore we have the confirmation of a newly formed medium-term trough. That trough is clearly above second from last peak, all the way down here. Protective stop needs to go at least 0.5% below that medium-term trough, and making sure that we're outside of 2 ATRs. It's got a little bit of work to do before it gets up to the 120 level, but has been fairly strong. Would have been nice to see perhaps a little bit more bullish candle, but nevertheless constitutes a valid setup. So entry for this one, 120.70 on stop at $120.70 with a limit to $121.90. Protective stop at 107.73. That's ABC. Next one, ADI. We'll quickly zoom out, and you'll see that this has been on a very strong move for a long period of time. And now finally presenting itself as a trade opportunity. Last trough that has just been confirmed by this last candle with a higher high and a higher low. Short-term uptrend, short-term downtrend, therefore a medium-term trough forming, which is well clear of our second from last peak. Last peak, second from last peak. So good strong price action, shallow retracement. Therefore, an on-stop order at $68.99 with a limit to $69.67. Protective stop at least 2 ATRs away and at least 0.5% below that last trough has the protective stop at $62.89. That's ADI, Analog Devices. Next one, ADS. Zooming out, and you'll see that we're at all-time highs. So as such, we've just had the confirmation of a new short-term uptrend, short-term downtrend, so therefore we have the confirmation of a new medium-term trough, which is well clear of our second from last peak over here. As such, our on-stop order needs to be 2 pips above at the high of our medium-term peak. The medium-term peak there you can see, the high there at $312 on the knocker. So our order on stop at $312.02 with a limit to $315.14. Protective stop at $288.06. That's ADS, Alliance Data Systems. Next one, AVGO. Zooming out, you'll see a very strong trend there. Just had the confirmation of a short-term uptrend now in place. So on the basis of that, a new medium-term trough has now been confirmed. That trough, where is that trough in relation to second from last peak? It's well clear of that, second from last peak, and as a result confirms one of our criteria, good price action. On stop order for this particular trade at $150.52, that's 2 pips above that last medium term peak, with a limit to $152.02. Protective stop at $132.12. That's AVGO. Next one on the list is BG, Bunge Limited. Springing up and down, a little bit like a bungee there, isn't it? Let's just zoom out and see where it's been. Okay, it's got a long time ago we had an old long-term trough down here. Since then, no long-term peaks in this particular area, so if we zoom in and have a bit of a look, our next long-term peak is way above here at around about $135. So we've got a long way to go until we get up to there. At this particular point, we've obviously had a little bit of supply coming in at these levels, pushing the price back down. They're not long-term peaks. If they were long-term peaks, then we would have to have a if they were long-term peaks, then we would have to have a first test. This in itself would represent a first test in any case, and as a result, we would also be stripping away some of that particular supply there. We've seen some bullish candles coming through, so our short-term downtrend, our short-term retracement is now turning into a short-term uptrend, so therefore the formation of a new medium-term trough. Alright, on the basis of that, we can structure a trade 2 pips above the high of our previous medium-term peak. So therefore, an on-stop order at $93.06 with a limit to $93.99. Protective stops at $86.86. That's BG, Bunge Limited. Next one, CHDN, Churchill Downs. We'll scroll out. And again, you'll see that we are in pretty much blue sky territory. Lots of lovely white candles through here, so price action really strong. Looks really good in terms of relative strength compared to what the rest of the market's been doing. Really dilly-dallying the rest of the market over in the US, but since January time, if we have a look at this stock, it's gone from 95 up to close to $130. So doing very well against the rest of the benchmark. You'll see just recently a new medium-term trough has been confirmed for us. Where is that trough in relation to? Second from last peak? Well, it's clearly above. So as such, structure of our trade, 2 pips above the high of our medium-term peak. High of that medium-term peak, 129.01. So our on-stop order goes at 129.03 with a limit to 130.32. That is 1% above the entry level. Protective stop at 118.75. That's CHDN, Churchill Downs. Next one, Dollar Tree. We'll zoom out and see where we are. All-time highs. So over the last few months, this has been putting in a short-term downtrend. Just recently, the last candle confirming that we are now in short-term uptrend. So as a result, forming a new medium-term trough. Medium-term trough is clear of our second from last peak. There's the last peak, there's the second from last peak. So as such, our protective stop needs to be at least 0.5% below the last medium-term trough and outside of 2 ATRs. Dollar Tree on stop at $84.24 with a limit to $85.08. Protective stops at $74.13. That's DLTR, Dollar Tree. Next one, XPE, Expedia. We'll just zoom out and see where we are. So blue skies. Again, short-term uptrend just being confirmed. So therefore we have the confirmation at the same time, the formation of a new medium-term trough, which is well clear of our second from last peak. Price just needs now to get up past our medium-term peak. That high, $115. So our order on stop at $115.02. That's 2 pips above that medium-term peak. With a limit to $116.17. Protective stop outside of 2 ATRs and at least 0.5% below our last medium-term trough has that protective stop at $102.94. That's Expedia, EXPE. Next one on the list, Hanes Brands. Again, let's just zoom out and see where we are. Really strong trend, isn't it? Very steep. Certainly a strong upward movement. It's had a pause. It's time to regroup, etc. And now we've just put in a confirmation that the short-term downtrend has turned around and moved back to the upward side. We've got a nice strong candle coming in through here. At this particular point, we actually had a short-term trend confirmed before then, the one all the way down here. For some reason, not coming up on the scan, not too sure why, but certainly coming up on the scan this week, loud and clear. So to structure this trade, 2 pips above our medium-term peak, puts us with a on-stop order at $34.82 with a limit to $35.16. Protective stop at $30.26. That's HBI, Hanes Brands. Next cab off the rank is LBTYA, Liberty Global PLC Class A. Let's check its history. So it's been trending for a nice long period of time. This is during the GFC, and since then it's just been one steady movement upwards, going from around about a low of about $5 back then in 2009, getting up towards $60 now. So a very, very nice return during that course of time. We've now had a short-term uptrend confirmed, so therefore at the same time confirming the formation of a new medium-term trough. Where is that trough in relation to the second from last peak? There's the second from last peak, and you'll see it's well clear. So as such, we just need to wait for the break of the medium-term peak. So our trade structure becomes on stop at $58.68 with a limit 1% higher than that, $59.26, and our protective stop at $53.56. That's LBTYA, Liberty Global PLC, Class A. Next one, Mercado Libre, MELI. Again, let's zoom out and see where it's been. So you'll see that we've got pretty clearly here a long-term peak. That is the highest point between a medium-term uptrend and medium-term downtrend, a long-term peak. We've come up before and had a test of that particular level. And in actual case, you'll see that we have lower peaks, then lower troughs, another long-term peak as well. So we're now clear of this long-term peak, and if we think about this whole area in here, we've got this ceiling to floor to ceiling type movement. Since then, you'll see that price has started to, through a series of higher troughs, move up to these previous levels, moving past them, now coming back for a retest of these levels, and if we can break through the 153 level, then things look fairly positive for this. So MELI, let's just zoom in a little bit closer and see what we've got here. So last trough, at or above second from last peak, certainly is. So nice strong price action, nice strong candle last week. We just need to clear our last medium term peak, and the high of that medium term peak is 153.42. So our order on stop at 153.44, that's 2 pips above, with a limit to 154.97. Protective stops at least 0.5% below our most recent medium term trough and outside of 2 ATRs, has a protective stop at $139.71. That's MELI. Next one, Outer Wall, OUTR. See where we've got to. Fairly volatile sort of stock, this one, in terms of the way that it moves up and down, but recently showing some very strong price action. Formation of a higher trough, nice bullish candle last week. So medium term trough, well clear of our second from last peak all the way down here. We just need to break through the highs. So as a result, our on-stop order is at on-stop order at $79.76 with a limit to $80.35. Protective stops down at $71.12. Certainly 2 ATRs is the reason for our stop being down this low. Well clear of that last medium term trough. That's OUTR, Outer Wall Inc. Next one on the list, SEM, Select Medical Holdings Corporation. Zoom out, and again quite clearly see that there's no history in the background that's going to impact on this particular stock. So again, similar sort of price action to some of the previous ones where we've had this ceiling to floor type of movement, and the clue that we're starting to get some movement out of this particular range is these formations of higher troughs. Now we've broken out and we've come back, we've had a little bit of a retest of these previous points of supply through here, and looking now to having paused, price starting to move back around. We now have short-term uptrend being confirmed on this last candle, so therefore at the same time a medium-term trough also being confirmed. Trough is certainly clear of the second from last peak. So we can get the value line and check that as an example. So to get that value line, just right clicking on the background of Beyond Charts. The high there, $15.75. The low over here, $15.88. So that trough coming in well above that second from last peak. So the order on stop, 2 pips above the high of our medium term peak there. The medium term peak at $16.85. So on stop at $16.87 with a limit to $17.03. Protective stop at $15.07. That's SEM, Select Medical Holdings Corp. Next one on the list, SPR, Spirit Aerosystems. Let's zoom out and see where we've been. Okay, all-time highs. Good sign. Nice strong trend. A lot of white candles in this one as well. Nice shallow retracement. Pin bar followed through by a nice confirming candle. Very strong price action. Last trough clearly above second from last peak. All we need to do now is get past our medium term peak, the most recent one. The high there, $56.20. So therefore 2 pips above that on stop at $56.22 with a limit 1% above that at $56.78. Protective stop, certainly at least 0.5% below that last trough, but also outside of 2 ATRs has our protective stop at $52.36. SPR, Spirit Aerosystems. Next one on the list, SYNA, Synaptics. Let's have a bit of a look and see where we are in the scheme of things. Just get rid of that value line. And you can see that we're at all-time highs. More recently, middle of last year, fairly volatile through that particular period, but just now that we've passed this longer term peak here, we've broken out past the longer term peak, we're coming back for a retest, so the price action is certainly looking good. Would have been nicer on this one to see a more bullish candle. We've put in a little bit of a pin bar there. That pin bar, as you can probably tell, the higher that pin bar has passed our medium term peak. So what does that mean? Well, it means that potentially it might void the trade. And so therefore we have a rule that says as long as price hasn't extended more than 1% above our most recent medium term peak, we're still able to take the trade. Now this one was very close to extending to that beyond that 1%. And as such, you'll see here with the on-stop order, we're going to enter 2 pips above the high of this candle as long as adding those 2 pips is not more than 1% above our medium-term peak. And in this case, it's very close. We have an on-stop order at $102.52 with a limit to $102.54. So a very small limit on that one. And a protective stop at $94.54. So what you may well find that when these pin bars, if price does happen to close above these levels, that supply all of a sudden that was coming into that market realizes, uh-oh, I've made a mistake. And as a result, as that supply starts to flip to the other side and become demand, then all of a sudden we can get a very quick price movement. So we'll just have to wait and see whether that eventuates, but in many instances that can certainly occur. So that's Synaptics, SYNA. Next one on the list, VAC, Marriott Vacations. Be nice to be staying at one of their resorts right now. Nice steep trend, been performing very, very well. Scroll out a little bit further, you can see that we're in blue sky. Had a nice shallow retracement. Again, thinking about what the rest of the market has done. Our retracement, our formation of that new medium-term trough is well clear of our second from last peak. So not the last one, the second from last one. So all we now need to do is break the last medium-term peak. Again, a bit like the other one, would have been nice to see a little bit more bullish candle on this one. A little bit of a doji there, not a whole lot of net price movement during the course of the last week. However, should price get above our last medium-term peak, we have a trade. And as such, the entry level for that trade is on stop at $90.90 with a limit to $91.81. And a protective stop at $84.06. Well outside the 0.5% below that medium-term trough, which is our basic requirement, and outside of 2 ATRs as well. That's Marriott Vacations Worldwide Corp, VAC. And I think that might be it for the stocks in both the US and the Australian market. Please go and check the watch list. You will find that over the course of the last week in the US, there were 31 stops in the US that have all been trailed up, so that's a good sign that the market's moving in the right direction. In the Australian market, there was 6 trailed stops. So again, check the watch list for that. There was 1 stop out in the US, a stock TA. So let's just go and have a quick look at that now. So I'll bring that one up, and you'll see in this particular case here, the reason for it being stopped out is there's our trailing 3 ATR, and price has now closed below that. So that's an instant exit from the markets. The other one was in the in the Australian market, CNU, Chorus Limited. So I'll just bring that one up and have a closer look at him. Initially, we had a soft stop on this one, which got converted to a hard stop. The hard stop came in at $2.67, and you'll see last week that once the soft stop was converted to that hard stop at $2.67, during the course of last week's price action, price came down and breached what was then the hard stop. So that trade is now closed. It'll remain in the watch list for the next fortnight, and then it will be removed and positioned in the closed trades section. All right, that's about it from me this particular week. If you've got any questions with your trading, etc., certainly give the guys a call. Either David Seal, myself, or Jeff Cornwall. Request a coaching call on any of the emails that you receive from Elite Wealth, and we'll be happy to help you out. There was Q&A on the earlier session. I just discovered that halfway through the session that it wasn't recording, so unfortunately there's no audience live here at the moment. This is actually a recording, but next week hopefully the recording software works properly and I don't need to re-record. Anyway, have a good week with your trading. Don't forget the education session again on this Wednesday. It'll be a recording. David Seal's been very helpful in running a couple of sessions on the Trade Journal. So he'll be doing another one. That'll be out Wednesday afternoon at some stage. And then on Friday, we do our macroeconomics analysis session with Jeff Saffer. So best of luck for the rest of the week, and we'll catch you live next Monday morning. Bye for now.